Hi, I'm Tim Sustak, Chief Credit Officer with Vizo Financial, and this is your FOMC update for the January 2020 meeting. Last month, we reported that the Fed was likely on hold for a while when it came to actions regarding the Fed funds rate. The January meeting did nothing but reinforce that sentiment. With no surprise, the FOMC unanimously chose to leave the Fed funds range unchanged at its January meeting. The range remains at 1.5 to 1.75%. The committee did, however, raise the rate on excess reserves by 5 basis points in an effort to keep the Fed funds rate well within its desired range. The statement following the meeting changed very little from December. The committee described the economic backdrop as one where the labor market remains strong, with economic activity and household spending rising at a moderate rate. That's a small change from last month, where household spending was described as rising at a strong pace. Again, the committee indicated business fixed investment and exports remain weak, and that inflation continues to run under 2%. The committee continues to see the stance of monetary policy as being appropriate to support the expansion, continue strong labor market conditions, and return inflation to the committee's symmetric 2% objective. What did Chairman Powell have to say after the meeting? A look at his press conference after the break. Welcome back. There wasn't a lot new in Chairman Powell's press conference, but there were a few items to note. Again, he said that the committee believes that monetary policy is positioned to support continued economic growth, a strong job market, and a return of inflation to the committee's symmetric 2% goal. It's the last part that's important, as his wording here, as well as in the post-meeting statement, featured a bit of a change. In past statements, the phrase near the committee's 2% objective was used, as opposed to return to the committee's 2% objective. The committee felt it important to change the wording so it was not misinterpreted that 2% was a ceiling, or that the committee was comfortable with inflation continually running below 2%. They wanted to be sure that it was clear that the committee's goal is for inflation to run at times a bit above and below 2%, thus the symmetric nature of the goal. The chairman also indicated that inflation running persistently below the committee's goal serves to lower inflation expectations, which in turn pulls actual inflation even lower, leading to lower interest rates. He said that would give the committee less room for reduction of interest rates should they need to fight an economic downturn. He made the point that they have seen the scenario play out in other parts of the world, and the committee is determined not to let that happen in the U.S. Overall, much of the same, though the committee seems to be even more committed to its inflation goal, or at least wants to be sure we are aware of their commitment. Either way, it's pretty clear the committee thinks rates are at an appropriate level to reach their goals unless something materially changes. The markets seem to be looking for something to change, given they currently see about an 87% chance of further rate cuts this year. That's the update for the January FOMC meeting. Thanks for watching.